If you have ever wanted to start investing but don't know anything about the stock market and you just don't want to spend your time reading charts, then this video is for you because I'm going to show you how you can invest on autopilot. Hi, I'm Lady Boss Trader Terry and welcome to my YouTube channel where I share my journey on trading and investing. I hope some of the tips will help you become a better trader and investor too. So today's episode was inspired after speaking with my cousin about her young adult children and how to help them invest more in their future. This episode is not just for young people, but I wanted to be true to my word and create this video. The short version is I use M1, a online service for auto investing or robo investing in shares, ETFs, and even crypto if I wanted to, all done on autopilot. So you might say, hey, how does this work? There's a paid service for some additional features, but hear me out and stick to the end of the video because I'm going to share with you a couple of tips that may help you, and I'm going to also share with you another tool for free that pairs well with this. So how would you get started and what is M1 all about? Like I said, it's an auto investing tool. You can use it on your desktop or mobile, and essentially you pick sort of a portfolio that you would like to use, and then you just have your bank or even M1 auto deposit money in here and invest. On this screen, just some of their model templates, if you will, for investing. So if you want general investing, then they have a suite that you can use here with the different holdings, and if you click on them, then it allows you to do research and you can look at the chart and see how it's been performing over time and decide if this is what you're interested in, and then you would just click it and then start depositing your money whenever you can or on a periodic base. So like every couple of weeks, every payday, every month, every quarter, whatever works for you. Now, personally, I chose the income earners. I really love dividend stocks because you get paid to hold the stocks. And so those are what I chose. You can choose combinations of those. So let's say you wanted 50% to be your income earners and you picked one of the items down here that met your risk tolerance and how it was performing, and then maybe you decided that then you wanted the other 50% to be stocks and bonds. Maybe it's not so aggressive, it's a little less risky. You can start investing with a little amount of money because if you'll notice here, these are the amount of shares, and if you notice, some of these are decimal points. So you can't say, hey, I don't have hundreds of dollars to start investing. You could start with $50, $100, and increase it over time, and whatever your portfolio or your template that you've chosen, it will buy those fractional shares. Now, personally, when I had less money, I chose a portfolio or a template that had less holdings. Think of it this way. If you had $50 and you picked a template that had 10 things, it's going to take you longer to get whole shares of those 10 things versus if you had something that had holdings of 3 shares. I also want to point out that as those holdings in those templates are bought and sold, that also happens for you. So you can start growing your portfolio like that. Another thing that I wanted to point out is that you can see your activity. You can see your holdings over time. You can see what's going on. And if you really want to nerd out on stuff, you can download it over here and get a summary of that information. Now, this is the part where I also want to share with you a couple of tips that can help you in your journey should you decide to check out M1. At the very beginning, I kind of skipped over this part, is that yes, you can earn like a savings account, 5% APY. You can invest, you can spend some money, you can even borrow against it. Now, we don't want to do that. We're trying to be savers. And then I forget, yes, with the Plus membership, you can get some other benefits from that. But the thing I wanted to focus on right here is the invest portion, where you can open up a different account. So at a minimum, you have to have an individual account. Yes, you can have like a traditional Roth, different IRAs, you can have a trust account and joint custodial. And so for those that don't know, a custodial account is for a minor. So I have an individual account. I opened up a custodial account for Auntie's Angel, and I also have a traditional IRA. Now, I also did this for my dad, and we open up a trust account. Now, as of that time frame, which would have been probably summer 2023, we had some challenges with this, in that the trust account couldn't move money with all the other automation features that I could with an individual account. I would investigate if that is something of interest to you. It was better for us to just leave things as an individual account, which is what we did, and then just make the trust reference in the beneficiary documents. Again, as I always say, I am not a financial advisor. Repeat after me. Hold up your hand and say, Terry said she is not a financial advisor. She is just sharing her experiences and anything else for educational purposes, and make sure you do your due diligence. And support with them is pretty good. The second thing is that they don't really have great reporting tools, which brings me to my second tool, which is Track Your Dividends. It is a free tool. You can pay for it for research and other things like that. But for the most part, I'm just using the free portion. I can connect one account automatically, and meaning it will auto sync as I buy and sell shares in my M1 account with my Track Your Dividends account. And what I like about this is I kind of nerd out on the numbers and seeing where things are. And so this gives me the reporting piece as well as future speculations. Now, I'm not going to go through all of that because it's sort of outside of the video, but I will show you future value. Now, I've played around with this, and while this might not seem like, oh my God, in 25 years, this account's only going to have like a little over $8,000. Well, that's in dividend earning income. That's not the value of the account. The value of the account would be this particular amount, and that's based on how much you can contribute to it over time. So while $5,000 annually might not sound like a lot, let's say we did this $10,000. And then if we were to update this chart here, this is 16 grand in dividend income, and that's based on the current dividends that are in the account right now. You could always change and get more aggressive dividend earning stocks and ETFs. I will leave you with one final tip, and this is actually pretty important. So I was transferring funds or transferring stocks and ETFs, which you can do from another brokerage should you desire, and everything stays intact. You don't have to sell them to move them over here. But the important thing is, when I started to invest, I intentionally did not do a bulk purchase. Let's say you were going to have $5,000. I did not giving you advice, did not say purchase $5,000 right out of the gate. I instead incrementally spread that 5,000. In fact, I spread that, let's say, 4,000 over time and left $1,000 as a cushion. And here's why. You don't know, are you buying high? Are you buying low? But by doing it periodically, it sort of all evens out. That sounds good. Guess what? I have a free community that you can join with the link below, and we discuss lots of things about trading and investing, and definitely you can ask more questions there, as well as you can click on the link below if you want to give M1 or track your dividends a trial. But otherwise, please consider investing, because I wouldn't want you to make my $22,000 mistake. That's the last thing, I swear. So when my niece was born, Apple was approximately $2.50. If I had bought just 100 shares then, I think I did this calculation last year, that original $250 would be worth over $22,000 because of time. It's a dividend stock, and I think there was a split also. So all of those things cost me $22,000 if I had only started investing when she was born. And so now I'm definitely playing catch up. So I hope you found this video helpful. Definitely click the links below. Let me know if you have any questions, and I will see you at the next video. Bye.